Hello everyone and welcome back to Financial Foundation series. Today's video we will be diving into two crucial aspects of the stock market, stock metrics and the two major approaches to analyze them, fundamental and technical analysis. By the end of this video, you will know how to evaluate stocks using key metrics, understand the difference between fundamental and technical analysis, and learn how to use each approach. Also, we are going to talk about how we are going to use them in our next sessions or in our practice for coding. Okay, so let's dive in. What are stock metrics? Like every other aspect of life, uh, financial world wants to measure how our process is going on. Is it good or is it bad? And thus they need some kind of thresholds for certain uh, financial activity measurements. Those are the metrics. It's like imagine you have a student going to school and from time to time you are receiving report cards for them. So stock metrics are just like report cards, but on a company level, of course. They help you to evaluate performance of the stock, make informed decisions about whether to invest or not. Uh, most of the metrics, uh, most of the important metrics are included in either fundamental or technical analysis. And if metric is not included in any of those, it doesn't mean that it's useless. But it's just like a general consensus or common understanding of what metrics to use in technical or fundamental analysis. Now there is big variety of sources for such information. One of the most important one is the Yahoo Finance. Yahoo Finance. It's great source of information for not that long historical data, for like data, most recent data. If you need any to dive deeper into historical data, there are other sources as well, like uh, financial modeling prep, modeling, here it is, or EOD, EOD many other sources are available too to get the data. Why I'm showing you these three? Because those three are data providers have APIs, like connecting your application to their data sources to get the data. That's why I'm going over with these three. But of course there are plenty of them available which are providing like user interface. Well, so let's open any stock. Let's go with Apple. Okay, let's find the metrics we are talking about. Okay, here we are. So we will start with PE ratio, price to earning ratio. This tells how much investors are willing to pay for $1 of a company's earning. As a metric, it should have the norm range and the out of norm range. By the way, you can see here that the live data is shown and stock is trading in like real-time data. High price to earning ratio can be an indicator that the stock is overvalued and investors expect some strong growth. A low PE might indicate undervalued or slower growth. In this case, for Apple, it's 40. For me, it's a bit high, but we can check those ourselves to see what are the different recommendations on considering the healthy PE. Healthy PE thresholds. Yeah. Investors would refer to from 20 to 25 as the average PE ratio. So Apple in this case is a bit higher than the threshold. And on the other hand, lower PE might indicate undervaluation or slower growth. This much about PE. Next will be EPS. Let's check if this metric is available here. Here we go. Earning per share. It has a value of 6.07. So higher EPS is a good sign of profitability. Let's check also if there are any EPS thresholds. And basically you can see that there is a variety of opinions on the matter of EPS. Common understanding is like fixed. There is no fixed one. There are many factors on which this depends, such as segment of the network, competitors, etc. But if EPS is increasing, it automatically drives the stock price to increase as well. Like the more earning you get, the higher company stock demand will be. So this is about EPS. Next is price to booking ratio. It compares the stock price to the company book value. Let's check on this one. It's 64.72. Let's check this one as well. Thresholds. Any value under 1 is considered desirable for value investors, indicating an undervalued stock. However, some value investors might often consider stock with a less strong PB value of less than 3 as their benchmark. For Apple, we can see that we have 64, which makes that far away from being undervalued. Next comes the dividend yield, the annual dividend payment as a percentage of the stock price. Let's check for that one. Dividend score. It's hidden. Basically, higher it is, higher the income of investors is per stock, and higher is desire for the stock or demand for the stock. Checking one more time. Dividend yield in 3 to 4% is a good yield for investors which are looking for income from dividend stocks. 4% and above, a yield that should be carefully investigated, and 10% and above, a yield that is considered high risk and indicates the company will likely cut the dividend. So if your dividend makes 10% of your company stock, it's definitely company stock price, it's not healthy. It means that either company stock is undervalued or dividend is unfairly high. This much about the metrics. Now let's talk about fundamental analysis. What is it? Fundamental analysis focuses on evaluating a company's financial health and the stock value. It is like something like checking the engine before buying a car. The key components of the fundamental analysis include financial statements, which we can find for every stock. Let's search it here. It's not available with this name, but companies, as I mentioned in my previous video, are publishing their financial results either quarterly or annual. Those are quarterly results as the end of quarter 3, which is September 30, 2024. We will expect upcoming days to have something of quarter 4, and also it will be annual, but annual is not available for Yahoo Finance unregistered users as we are now. So the key components include like income statement, balance sheet, and cash flow statements, PE ratio, DE, debt to equity ratio, which measures basically the company's general debt to ratio to the equity they own, and the profit margins. Also, there is a metric called intrinsic value, which is assessing whether a stock is overvalued or undervalued, and that would be the topic of another discussion, but we won't go on it deeper right now. But this will be, of course, covered in one of the upcoming videos. So the importance of this is like if you plan to invest for the long time, so you consider yourself long-term investor, those investors use fundamental analysis to pick stocks that are likely to grow steadily over time. Let's check Apple stock. This graph here is what represents the steady growth. You can see here that in like 5 years, let's check even more. Yeah, that 2018 the stock was 46, and now it's 240. So it's definitely a company that is profitable for the long-term investors. And going back to Robinhood, I would also recommend you to check the ETFs, which are exchange trust funds. Let's check the most popular one of the most popular, SPY, which is Standard Poor's 500, and see what is in it. We can see the technology is 34% roughly. So this fund and the managers of it decided that the technology is the most important sector to invest in. We can see that 34% of the available for investment money is in technology segment, and among that Apple is on a first place. Like 8% of this whole company is invested in Apple, and that's probably one of the reasons of the continuous growth of Apple, because institutional investors like funds, which we discussed yesterday, they do believe in Apple and continue to invest on it. Next comes the technical analysis. Unlike fundamental analysis, technical analysis focus primarily on price movement and trends. It's like watching the road for patterns and signs rather than checking the engine. The key tools and indicators are moving averages. The name says it all. Moving average, or SMA, simple moving average. Can we find that information here? Or not? No. But this is just calculating of the price average for any given period of time. For short term, they are considered SMA for 5, 8, and 13 days, and for long term it's 50, 50, and 200 days. If you will check my channel, you can find video of those metrics. I also covered those extensively in the book that I published, like a digital book, and also in Medium and Substack articles. Those simple moving averages are definitely interesting for you to check and analyze, and they are like nice patterns to follow, and which are kind of helping you make decisions for it, because it's really interesting and dynamic. This helps identify trends, uptrend or downtrend, whether the market is. Can you repeat what we went through yesterday? The two animals, bulls and bears, upward and downward trends. So it helps, this MA helps identify if the trend is bullish or bearish. Let's check for 1 month. Okay, now if you see here, this trend is bearish, market goes down, and this part is bullish, market goes up. Next is relative strength index, or RSI. No, not here. RSI. So RSI measures momentum on a scale of 1 to 100, and if it's above 70, it means that the stock is overbought, and if it's below 30, it's oversold. Again, as in moving averages, I have covered this pattern and the metric and the importance of it in different topics and articles, and I definitely plan to go deeper on this more, because it has potential for a very big dive in it and a lot of information on it. So traders, why it's important, the technical analysis, because traders often use it for short-term decisions. It's great to analyze the timing of entry and exit into market. So if you bought a stock here, it means that you made an entry. If you sold it here, it means that you exited. So the timing does it all. You need to get into market on time when the trend is bullish, and get out when it starts to be bearish, but still keeping the profit. What is different between fundamental and technical analysis? Fundamental is about the value of the company, while technical is about the movement of the stock price. Fundamentals thus is better to use if you have some long-term goals. And technical analysis works if you are planning to operate on short term. It's like two sides of the same coin. Fundamentally strong company may not always have the perfect timing for investment for sure. That's when the technical analysis comes and can help you to refine your strategy. This will be all for today's video. Before the wrap up, let's go over what we covered. We covered key stock metrics and how to evaluate them, the basics of fundamental and technical analysis, and how those approaches are different and complement each other. And being an investor is like being a good repairman. The more instruments you have, better decisions you can make and better actions. If you find this helpful, don't forget to like, comment, share and subscribe to our channel to not miss any videos in the series. Hope you enjoyed the time. Thank you. Oh yeah, before closing the session up, why these metrics are important? Because later on in our videos we are going to build dashboards to show us fundamental and technical analysis and point as us as a beginning investor on what will be the good moment to start investment and what will be the bad moment to start investment on the stock or any other investment market. Thank you for your time. That will be all for today. Stay tuned for the next video in our series. Bye bye.